Welcome to Woods of Stardon. This is CH. I will be covering the Schroder ISF European Value Fund in this video, which is part of my Absolutely Biased Comments or ABCs series. The aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. Schroders is a British multinational asset management company headquartered in London. Founded in 1804 by Johann Heinrich Schroder and his brother, and grew over the last 2 centuries into a reputable financial institution providing various financial services. Schroders was publicly listed on the London Stock Exchange in 1959 and had several rounds of changes in its key business focus over the years. In the 1980s, Schroders heavily focused on growing its investment banking business. However, in the year 2000, Schroders decided to sell the investment banking business to Citigroup and instead turned to specialize in asset and wealth management business instead. Today, Schroders manages over 800 billion sterling pound of assets with over 6,000 employees and serves 38 locations globally. The Schroder ISF European Value Fund is a sub-fund under the Schroder International Selection Fund or Schroder ISF fund family. The fund family is set up as a Luxembourg SICAV company structure and is UCITS qualified. The fund is registered as a MAS recognized scheme, which means it is suitable for retail investors. The Schroder ISF European Value Fund webpage indicates that Andrew Liddon is the sole manager for the fund. Andrew joined Schroders over 20 years ago and is the manager for the fund for about 10 years. He focuses on UK and European value-focused strategies in the firm. Morningstar shows that there had been a few rounds of manager changes over the years since the inception of the fund in 2003. The good thing is that each manager stayed quite long with the fund, so there were less instability to the fund's strategy and style. The Schroder ISF European Value Fund has a pretty concise investment objective stated in its webpage and fact sheet. As stated, the fund invests in European equities with the objective to generate capital growth and specifically to outperform the MSCI Europe Net Total Return Index, net of fees over 3 to 5 year period. It is interesting to see that while the fund name implies a value style bias, the fund has opted to use the generic index instead of a value-focused index for its performance benchmark. The fund prospectus provides a bit more elaboration on this. Here, it states the fund typically has a portfolio of 30 to 70 stocks. I would generally consider less than 50 stocks as a concentrated portfolio. The fund is mandated to invest at least 2/3 of assets into European, including UK companies, while the remaining 1/3 of the assets has the flexibility to be invested in other countries or regions or into cash equivalents. There is a brief description explaining the value in the fund name, whereby the fund will primarily invest in companies that are undervalued relative to their long-term earnings potential as per assessed by the fund manager. There is no mention whether this is done by fundamental analysis or quantitative modeling or both, in which case I would assume it is just fundamental analysis because fund providers like to stress on their quantitative capabilities these days. It would be good for investors if Schroders would provide more details on the investment process. Derivatives may be used by the fund for investment purposes, although it is typically unlikely to find details on actual derivatives usage in the fund. There is also further elaboration on the benchmark index use, where it states the fund will aim to outperform the MSCI Europe Index, although performance can also be compared against the MSCI Europe Value Index. This looks a bit confusing, But what it probably means is that the fund manager wants the fund to have a broader investment universe instead of constraining to the stocks as defined by the MSCI Europe Value Index. This, however, also means that the fund manager has enough confidence to be able to generate a better performance than the broad MSCI Europe Index, even though the fund runs a value bias strategy. Historically, MSCI Europe Value Index has actually outperformed MSCI Europe Index, but with slightly higher volatility as well. Given markets move in cycles, and there are periods when value style do better than growth style, and vice versa. The recent few years, for example, have been great for MSCI Europe Value, and we would assume the same for the fund as well. Using MSCI Europe Index as a performance benchmark for the fund also potentially means that it might be easier for the value bias fund to achieve its objective in the long run, although there might be periods when it is unable to do so. In any case, we will look at the fund performance in more details later. As mentioned earlier, the Schroder ISF European Value Fund was incepted in 2003, giving it a long track record of over 20 years for investors to assess and compare. The fund AUM is currently over 700 million euro, which is slightly low but still a decent stable size. The fund webpage provides portfolio breakdown that compares against the benchmark, which is good for investors. Geographical breakdown is a bit strange though, as the fund seems to have a different category methodology, resulting in the benchmark having different country percentage versus the data from MSCI. For example, the benchmark that is MSCI Europe Index, as shown in the fund webpage, indicates that UK exposure is a lot lower at 16.5%, and there is 15% US exposure in the benchmark. The MSCI Europe Index official webpage, however, shows 23.3% UK exposure and no US exposure at all. I can't find any explanations in the fund webpage on this, and it certainly makes things quite confusing for investors. In any case, the chart shows that the fund has taken some rather different country exposures compared to the benchmark index. Germany and France notably have higher exposures, and the two of them add up to nearly half the portfolio. UK, on the other hand, is significantly lower. Sector breakdown data of the benchmark looks more consistent with what MSCI has, so the anomaly is just with the country definitions. Given this is an actively managed value-focused strategy, the fund does have some significant sector differences compared to the benchmark. Most notably, the fund has a much higher exposure in consumer discretionary and materials, and much lower exposures in financials and industrials. This is also very different if we compare against the MSCI Europe Value Index, that has a much higher financials and much lower consumer discretionary and materials. This shows that the fund is taking a rather different view on what value style means compared to the MSCI indices, leading to a very different portfolio construct. Investors should therefore be aware of this and not expect the fund to be similar to the MSCI Europe Index or MSCI Europe Value Index. The fund currently has 60 holdings in the portfolio, which is not too concentrated. We can also see that the top 10 holdings in the fund has zero overlaps with both MSCI Europe Index and the MSCI Europe Value Index, again showing that the portfolio construct of the fund is rather different. It is also useful to note that the weights of the top 10 holdings are all around 2%, suggesting there is a 2% soft cap to reduce concentration risk. Morningstar gives a bit more color on the fund portfolio, where it shows the fund has an average mid-cap exposure, suggesting there is more emphasis on small and mid-cap stocks compared to the benchmark. The fund is also strongly tilted to value, which is also seen in the financial ratios, where the fund has much lower growth ratios than the Morningstar category average. It is good to see the fund having a very active and rather differentiated portfolio, although this obviously needs to translate to a good performance, which we will go through later. The Schroder ISF European Value Fund comes with only a few share classes, which is typical of European equity funds. Class A is the retail share class offered in Singapore and the region. Besides the base currency euro, the fund also offers a US dollar unhedged share class and a Sing dollar hedged share class, both created about a decade after the fund was incepted. As the fund's investment objective is capital growth only, income distribution is not key, and therefore only the euro share class has a distribution option. The rest are all accumulation only. The retail A classes have a management fee of 1.5%. Adding other expenses gives a total expense ratio or TER of around 1.84%, that is at a normal level for most active equity mutual funds. Up to 65% of the management fee can be paid by Schroders to distributors as trailer fees. Distributors are also allowed to charge up to 5% subscription fees for the A share classes, although I think anything more than 2% for mutual funds is excessive. For investors looking for cheaper share classes, some distributors may offer C share class that comes with around 1.03% TER and a max 1% subscription fee. The fund, however, only has Euro for C class. The Schroder ISF European Value Fund A Euro distributing class has an annual distribution frequency, so it is definitely not the typical monthly distributing class that most Asian investors are used to. The distribution amounts and yields are also not consistent or stable over the years, as they simply are the natural underlying dividends from the portfolio that changes over time. This is therefore not suitable for investors looking for stable and predictable income. The most recent distribution yield as per Morningstar is pretty high at 3.95%. That is more similar to MSCI Europe Value Index than MSCI Europe Index. Given the distribution yield is decently high, it does make a meaningful impact to the overall returns experience, as seen in this Morningstar chart comparing NAV growth versus total return of the A distributing Euro class. For investors with the belief that the Europe markets and the fund will continue to do well, it might make more sense to go with the accumulation share classes for a better long-term compounding growth. The Schroder ISF European Value Fund provides comprehensive performance data in its webpage and fact sheets. We will first take a look at the A Euro class using the share class fact sheet data as shown here. The first thing to do as usual is to ignore the data that includes maximum subscription fees, because it doesn't correctly represent the fund's performance. On a separate note, the fund interestingly compares itself not just to the benchmark MSCI Europe Index, but also to MSCI Europe Value Index and its Morningstar category average. Only up to 10-year data is provided, although this is fine as the current fund manager has only started managing the fund since 2016, so we will be focusing specifically on his performance. From the calendar year returns, we can clearly see there are periods that the fund didn't do so well, such as 2016 to 2020, and there are periods where the fund actually did pretty good, such as 2021 to 2025. There is some correlation to how MSCI Europe Value Index performed relative to MSCI Europe Index, so this suggests the ups and downs of the value style market cycle in effect. The fund also had a clear outperformance in 2021 and 2025, but not the rest. This leads to a decent 1, 3, and 5-year outperformance against MSCI Europe Index, while 10-year was weaker. The fund also underperformed the MSCI Europe Value Index across all time periods, suggesting that the value strategy or the mid-cap focus approach unfortunately did not translate to a better return. Let's use Morningstar charts to show this more clearly. Here is a 10-year chart comparing the fund versus iShares ETFs representing MSCI Europe and MSCI Europe Value Indices. The biggest underperformance period was 2019 to 2020, that led to an overall weaker 10-year return. Moving to a nearer 5-year chart, we can see there are clearly more periods of decent returns from the fund in the recent years, and it is important for the fund to continue to improve in this aspect. The fund did manage to outperform IMEA, representing its benchmark MSCI Europe Index for this 5-year period, but still lagged behind IEVL. 2025 had been a great year for Europe equities and even more so for value-style strategies. The fund again outperformed IMEA while lagging behind IEVL, making it a difficult proposition for investors who are happy to just go with a passive solution like IEVL. Let's take a look at the currency share classes. US dollar and Sing dollar investors get a rather different experience because the US dollar class is unhedged while the Sing dollar class is hedged. The US dollar unhedged class is dependent on the exchange rates between US dollars and euro that had shown US dollar strengthening till late 2022 and thereafter some weakening progressively. US dollar investors therefore have to consider their views on the currency movements as well for this fund, which is not ideal. Sing dollar investors on the other hand get a better deal here. After Europe ended its zero interest rate policy in 2022, it has been running a similar interest rate trajectory as Singapore in the past few years, leading to nearly no currency hedging costs and even sometimes a slight negative cost for the Sing dollar hedge share class. As a result, the Sing dollar hedge share class gets nearly the same and actually slightly higher returns for this 5-year period as shown in the chart. Given there are no Sing dollar trading classes for the ETFs, Sing dollar investors actually end up having a more stable return experience with the fund instead of converting to euro to trade in the ETFs. Of course, it would be more ideal if the fund can deliver a better performance, or if there is another better performing Europe equity fund with Sing dollar hedge share class as well. With that, let's summarize our findings. Schroders is a UK-based global asset management firm with a long heritage and a broad product offering, totaling over 800 billion sterling pound of assets. The Schroder ISF European Value Fund has a very long track record of over 20 years and has had the same fund manager Andrew Liddon for the past 10 years, providing consistency in the investment style and approach. The fund essentially runs a straightforward Europe value style equity strategy. There is, however, minimal information available on the investment approach that deters investors from understanding the fund better. The fund has opted to use MSCI Europe Index as its performance benchmark, even though MSCI Europe Value Index is probably more relevant. I am not sure what the reasons are, although this does give the fund an easier benchmark to beat. The fund has a portfolio that looks meaningfully different from MSCI Europe Index and even MSCI Europe Value Index, especially in sector exposures and having a small and mid-cap bias. These lead to a high active share, although it is important to see it translate to good performance. Sing dollar investors get a decent deal with the Sing dollar hedge share class that tracks the original fund performance quite closely. US dollar investors, however, have to additionally consider FX views because the US dollar class is unhedged. Performance of the fund has unfortunately not been consistent. There are periods and years when the fund delivered strong returns, but these are shadowed by more periods of relatively weaker returns, suggesting that the fund manager needs to work harder on this. While the fund has at times managed to outperform its benchmark MSCI Europe Index, it has however quite consistently underperformed the MSCI Europe Value Index. Investors looking for a value-style Europe equity exposure can easily go for a passive ETF solution instead. In summary, this is a potentially interesting Europe value-style equity strategy given its rather different portfolio construct. However, performance needs improvement to be more consistent and more comparable to the MSCI Europe Value Index. This concludes my absolutely biased comments on the Schroder ISF European Value Fund. and I hope it will help in your investment journey. May we all grow wiser and prosper.